So this really came about, or came together in the last couple of weeks for me because I was using the bar chart, and I don't know why I just tried out the Heikin Ashi. I was trying to figure out, Martin Cole uses this software that he created called, I can't remember what it's called, but he uses what are called belief bars. And each bar it doesn't really have a closing price in the traditional sense. Like it has this horizontal bar, and the size of it is related to the volume, and it seems to always just be around the middle, or you'll get some bars that are just off center, and I was trying to figure out how he was coming up with this, and I just figured it's got to be some kind of average, and the Heikin bar is an average bar. It's the close of the bar is it's the open high low close prices divided by 4. So you'll get a lot of it just seems to be really easy to see any accumulation zones. And if you just look here, this is the daily chart, and if you look recently, there's just 3 days here of obvious accumulation, and what you will usually see is when there's high volume coming in, the next bar, if it's true demand, like that's going to stop the down move. In this example, the next bar, the close of it is either going to be almost going to be the same as the previous bar, and you won't get really the low go below the previous bar. And I don't want to get focused on the form of the bar. I'm talking about what that means in regards to the business model, because you've got consecutive bars where the close is the same. That's almost a week of just accumulation. And then with the Heikin you can easily see when they manipulate against that accumulation. Like you can see this is a stop run, right? This is a daily chart. It looks exactly the same as a 15-minute chart. But what I started to do was, I'd see that on the monthly, that to me has gone into accumulation this day here, and I've just put a horizontal line in the high and low of that bar, and then I'd start to go down the time frames and do this with each latest accumulation. So for this weekly, I'd put a high and low of that and see how they manipulate against that. And if you look on here, like the monthly, to me they're either moving in the direction they want to go, and then they're going to come all the way back and manipulate against this high to take the stops out and then go, or this is actually the manipulation phase that they're doing now. And usually, for me, the volume's quite high, so there's definitely demand, lots of demand coming in. If you go to the lower time frame, which is a weekly, you can just see consecutive weeks of accumulation. And here you've got 2 weeks of accumulation and then manipulation to the upside, hitting the stops, and then you've got this down, the first wave or the second wave. But what I'm saying is, this leg here could actually be the manipulation phase of the month, right? But this leg here is the profit release of this weekly accumulation manipulation profit release, whereas this looks to me like this is actually the manipulation phase of the month. And it's fascinating because no matter what time frame you trade, there's going to be, like, you could be like we discussed the last video, what looked like a trend was actually the manipulation phase of a higher time frame, and it's just constantly happening. So you really have to pick what time frame you want to focus on, and know whether you're in the manipulation or profit release phase. And you just tell that by sectioning off the accumulation, and it's just so easy to see with the Heikin Ashi. I just couldn't see it with the bars for some reason. It just wasn't obvious because the closes were the closes on a bar chart is, all over the place. But the closes on a manipulation on an accumulation cycle is all pretty much level. And I'll try and find a good example here. Like here, the accumulation area. See how the close is almost exactly next to each other, the level. That to me is an accumulation, and then it's gone into manipulation, where you've got accumulation here, obvious accumulation, and then they've created the belief this is going to the upside, and then they've manipulated against that, and you can see volume comes in at the low, hitting the stops, and this is the weekly chart, remember, and there's your profit release of a lot of pips. But look how easy it is to see the accumulation. So anyway, this is how this really came together for me, because of what I'd be doing is I'd mark off, let's just mark off this. Let's mark off as an experiment. I'm hoping my levels work. These 2 weeks of accumulation, right? And it probably went up to 3A or 2B. 3A didn't really breach it, but we go on to the day. Yeah, you've come. This is a weekly accumulation area we've marked off here, high and low. It's manipulated against that, and you can see the close even finished on the 3A of that. This little stop run, right? And then, this is the high of the monthly accumulation that I marked out, and it's gone to GM4A again. Like this GM4A is, it's insane how many times it goes to there after having kind of stalled at 2B or 4A. Lots of volumes come in at 4A, and then it goes back into accumulation, and then they manipulate against that, and they've gone back up to the that'd be the the low of the accumulation for the month, right? So where it goes next is really what I would do is, okay, I'd mark off, see there's an accumulation day here. Now I'd be looking for is this the manipulation area of the day accumulation, and will it continue up through? To me it looks like it is, because they've come back down to that accumulation, below that accumulation here, which is, that's a nice stop run. The other reason I like to use the Heikin Ashi is you seem to be able to easily see if it's a manipulation or a profit release or a true trend just by the way the closes play out on the bar. And I find a good example. Yeah, here's a good example. It's a long-term example, but see you've got this accumulation area here, obvious accumulation area. This is a 15-minute bar, and there's a nice transition of the bars. Like, to me, that what I see a lot is the market makers will create what looks like a trend to create that belief and pull in buys, and then it's just gone back into accumulation, and there hasn't really been a stop run here. There's maybe like a little bit of a stop run, but like it went up a little bit, but I wouldn't consider that a true stop run. I'd just consider that, okay, they've just tried to pull in a few more buys. To me, a stop run is something like this bar here. You can see, and on Martin Cole's software, he calls it a jump bar, where the close is way beyond the previous bar's low or high, and you can see it here. It's like it just jumped, right? And what happens is with a proper stop run, where they've really forced the market, and it kind of creates this excitement of people, and they see this market going down, and they think, oh, this is going further, and then they sell here into this bar, while obviously they're selling to the market makers who are buying all their orders, and then you'll see the next bar, the close doesn't even go past the low of the next bar. It just kind of stops, and you can see it's just going back into accumulation, and they've gone just a little bit further past that accumulation to try and pull in more. It's kind of another little stop run, and you'll usually see it on low volume too. That to me is kind of like a no supply, and then you get your proper, your profit release. So you had your accumulation, then your nice kind of looking, oh, this is definitely going up, creating beliefs in traders to buy, and then you had your really aggressive stop run of this accumulation here. Like, this is all accumulation really, and then your nice profit release. So that's why I like using the Heikin Ashi too, because if you look at the difference between why I know this isn't a stop run, even though the volume's really high, the next bar up, its closes beyond it, and it just there's just seems to be this. There's a difference in transition of bar to bar when you're on the trend, as opposed to this is just, it's an obvious, if this was true selling, this market would keep going, but it doesn't. It just kind of halters. So I hope that's obvious to see to me. I just know that's. Let's find another example. Like, this is the one we were looking at before, where we have the up to the accumulation at the 4A, and then we had this bar here. That to me is the stop run bar. I'd be looking to sell here. I probably would have sold here. But what I'd like to do is wait for a low volume retest almost of that, or a little bit beyond. It depends how aggressive you are, but the amount of trades I've missed for not being aggressive is I've got to start being more aggressive, let's say. But to me, I don't want to say shape of the bar, but that feeling of the bar, again here, it's the same kind of thing. Extreme volume, and then it just kind of dies off. In the next bar, that is definite supply hitting the market. Because if this was real demand, this market would just keep going. It wouldn't just stall and go into accumulation. Anyway, I hope that makes sense and you can see what I'm talking about. That's why I just changing this to this Heikin Ashi bar really has changed my trading tremendously and made me because I've had these levels for a while now, and the whole thing was kind of this weird inspiration, and it's taken me a while to really know what I've made, and um, I think not being able to clearly see the accumulation areas and then the manipulation against that, I haven't really been able to use it properly up until now, or understand it up until now.